Welcome to a new update, and today we're going to look at what the macroeconomics are going to bring when it comes to the markets and what impact that could be having on the markets itself, as the crypto markets are very boring. Indices though, these are making some more tremendous movements already. So it's time to start looking at what's going to happen on macro perspective, and then it's also time to start looking at what we can see in the price action of Bitcoin. Are the levels still the same as I'm watching them, or are the levels changing at this point? If you're listening towards this through the microphone that I'm using right now, I try to make it more easy tomorrow, but today you can still hear the echo as I'm currently in Spain enjoying some sun before I'm traveling back for Christmas to the Netherlands. So before we continue, make sure to hit the like button. Also make sure to subscribe to this YouTube channel. Check out our free trade letter in which we also dive into the TA of the crypto markets and the macroeconomics. We do it 3 times a week. Today we've got a new version of macroeconomics, and we also have the Friday one with the altcoin setups. Also, if you want to become a member of our group, we have been making 30R in the past 3 months. My portfolio is still up 10% on the month. And we're going to launch copy trading with multiple portfolios in January. And we've just launched Forex trading within the Discord. And we're going to integrate way more. And therefore, we've got 30% discount. Final 10 days. Make sure to use that. Only limited spots. Now, when we're looking at the macroeconomics at this point, we can tell that the markets are looking for the coming few days. First of all, today we've got to be consumer confidence kicking in, which is a key metric to show how the number of the confidence of the consumers is right now. And if you look at the data, the past data isn't really that good for the markets, except for the fact that the housing is actually going pretty good. But we are looking at a case where the consumer confidence has to be lower, which is also being reflected into the retail sales, which we got last week. Retail sales were way worse than was expected at this point. So most likely we are going to get more of that in the coming period. Also, what we have seen is that there are more layoffs and that the economy is slowing down. So slowly it will be impacting the entire economy. And therefore tomorrow is a big one. The GDP was already stated at 2.9%, but maybe it can be dropping down a bit. It's also getting a little bit revised once in a while. As you can see in the data here, the forecast is the number that comes out at the first point, and then the revised version, which is the final one, can be off by a bit. So if this one drops towards 2.7%, it's still positive and a recession is avoided. But it shows that the economy is actually slowing down. And what we also have to keep an eye on is the unemployment data, which comes out tomorrow, the unemployment claims. But the core lies into the Friday price action, because we are getting PCE inflation. If you recall what the FOMC has been saying, the most important data that they use is the PCE inflation, produces inflation. If that number is also following suit, so last month we have been seeing data that came in worse than expected for PCE overall. As we can see that the month-to-month data has been dropping. If that path continues and maybe it even goes negative or it goes into the 0.2% again, we can again see that the inflation is slowing down. And when inflation starts to slow down, at least a pause is on the tables for Powell, or at least he might be suggesting that to be doing in his next meeting on the 1st of February. Therefore, this price point of the PCE on Friday, just prior to Christmas, is an important one. If it comes out higher than anticipated, then the inflation keeps on being sticky, and we're going to have a pretty significant impact on the markets as well. So Friday is definitely the key trigger, but today and tomorrow some important ones are going to be placed as well. When we're looking at the markets, we can see that Bitcoin is currently consolidating. We're just acting sideways. I've been saying to you that a few levels I've been watching was 16.2, which ultimately gave a support level here and a tremendous bounce through which we got a bullish divergence and immediate swap back, in which we were taking out these highs here. The question is right now, are we going to consolidate and flip the level of 16.7 before we continue running towards 17.5 and possibly even 17.7, because I assume that we're going to take out the highs here. The other question we have is that if we don't hold 16.7, the level that I'm mainly looking at for the long is the area around 16.6. I think a very healthy correction would be to just test the range low, and when we test the range low we can start continuing towards 17.5 and potentially 17.7. If we don't do that and we don't get such a short correction, I'm assuming we continue running in the way towards these highs, and once we do during this week, the weekly candle will be great, the 3D candles will be great, altcoins start to look a little bit better, and then we can start off in Q1 of 2023 with some fireworks in which we are most likely going to get continuation on the markets and we are close towards a bottom. As right now the amount of people that are expecting the markets to continue falling or expecting 10k to be happening is just astronomically high, in which the sense of it is quite likely, and I expect that with macroeconomics it's terrible, etc. However, you should realize that crypto has been falling from 45k to 16k since Luna started. And now finally we got FTX out of the way, we got Luna out of the way, Gemini is looking for a tender offer, Binance is taking over companies, the peace comes back into play on the market, so at least some relief is most likely going to take place. And we also have to keep an eye on what the dollar is going to do. Right now, the dollar has been showing some momentum downwards, in which the crucial resistance zone at 105 is not really finding support, through which that if PCE comes in better than expected, so lower than expected, this one will start to fall, and then I'm looking at 100 points next. And you should realize that if we didn't have any intrinsic price action of or intrinsic crypto risks when it comes to the price of Bitcoin, we would have been trading way higher than what we were right now. So if PCE comes in better than expected for risk on assets, I think that Bitcoin is going to shoot up quite fast. So the levels still are remaining the same. I think if you're not into long, you're looking at 16.6. If we're looking at Ethereum, we can definitely argument that this is showing some serious strength, in which we are most likely going to close this gap and overshoot it towards 1300. Just a very healthy corrective move, not giving it all back. We're actually consolidating here for the day. If we come back, then this long is still existing at this point. But the question is, are we going to get it, or are you going to be looking for shorts on the highs? If we're going to get a runner which is going to be higher towards these highs, I think that this downwards fall based from masses and from the accountancy firms stepping out of the markets, if we get somehow back into 1300 range, I think it's an ingredient that we're going to continue running towards 1600s and 1800s at the beginning of next year. That's the update for today. Make sure to hit the like button, subscribe to this YouTube channel, and I'll be back tomorrow. Check out our discount, which you can find in the description beneath, and the free trade letter, which will be posted today towards you. Ciao.